Good morning and welcome back to this month's Oakcrest Insight. Today I want to update you on what's behind the rebound in the market from the March lows, volatility subsiding, and being patient. If there's one thing that's clear in 2020 so far, it's that the market is not the economy. Confidence can quickly erode, but it can also quickly emerge. Spring has really tried the patience here so far of investors, as the market decline we saw in March was one of the sharpest, most precipitous ever in less than a month. With parts of the market down 40 to 50%, some stocks down 70 to 80%. With the economic shutdown and uncertainty looming, the markets forecasted an 80% drop in corporate profits. The market drop was also one of the shortest, as this was due to the massive intervention from the Federal Reserve and the US government, as they built what I call a bridge over really what could have been on the downside in the market. In less than a month after this drop, the S&P 500 rallied 28% from its March 23rd low. This is why when I talk to clients, my common theme is to not panic. Those investors who did panic missed out on this market rally that we've been having the last 6 weeks. It's difficult, I understand, to not panic when headlines are in the media are doom and gloom. But remembering the big picture, that's why we're here. That's what we're here to help you with. So in the stock market, confidence can quickly erode, but it can also quickly emerge, and that should never be forgotten. At this point, a lot of good news has already been built into the markets, right? You got government spending for unemployment, you got stimulus checks going out to Americans, loans and grants to small businesses really helped offset the private sector losses in income. This has been, I would say, probably the biggest driver of the market rebound so far. So one of the indexes we track in our office is what's called the VIX index, or sometimes I refer to it as the fear index. This is an index that was created by the Chicago Board of Options Exchange. And what it does is it represents expectations for a 30-day forward-looking volatility. Now, as you can see from this chart, is that realized volatility is down 80% from its peak. It should be clear to all that investors are now more comfortable than ever getting back in as they recognize the economic prospects are improving, and that's the message behind the stock market rebound. With unemployment numbers likely above 15%, real GDP dropping 30% in the second quarter, many clients are asking me and saying, Ryan, why is the market doing so well? Well, one key to understanding is that investors don't buy shares of GDP. You buy shares of ownership in a distinct set of companies, many of which are actually done pretty well despite the general economic conditions. So imagine, let's pick on you, and you're a business owner. You own a company that has a major competitor nearby. One day, out of the blue, a meteor strikes that competitor's facilities and wipes them all out. Now, obviously you're not going to celebrate, but what happens to the enterprise value of your company now that your competitor is out of the way? It's going to rise, right? So in many ways, the spread of the coronavirus has given larger, well-capitalized companies, particular technology companies and big box stores that were allowed to stay open, an advantage over Main Street competitors. And unlike Main Street businesses such as your mom and pop shops, your local restaurants, a larger share of these large companies are publicly traded. The range of the rest of 2020 is wide open right now, right? You got variables including how quickly the economy is going to open fully, the development of therapies and vaccines to fight the disease, and how quickly people are going to get back to the new normal. So in summary though, it's going to take time to get back to record levels of corporate profits. But patience has paid off, and patience will continue to pay off the next 12 to 24 months as well. Next month I'm going to continue updating you on the markets and how they're responding to the opening up of the economy, and really the expectations going forward for the second half of 2020. I look forward to seeing you next time on Oakcrest Insight.